Hey everybody, Boris, BK Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, October 16th to October 20th, 2017. And really the focus this week in the COM dollar land is going to be very much square set on the Australian dollar. That's where most of the major data set is. And that's where it really is going to be interesting because it's coming up against some very, very core resistance on the charts. Let's take a look at the levels first, then we'll take a look at the calendar. So the levels have moved up a little bit. Aussie now is 78 to 80 range, with 80 a very, very key resistance. The one trade that is very much equilibrium is dollar CAD 125. 125 seems to be the oscillation for dollar CAD, and it's really trading this 24.26 for the time being. We do have some Canadian data at the end of the week as well, so it'll be interesting to see if that moves off the 125 equilibrium. And the other interesting surprise this week was the strength in the Kiwi dollar. Actually, very, very big push. In many ways, I think it was just simply short covering on the carry. U.S. yields continue to go down, and I think there's just a very, very strong correlation between U.S. yields and an inverse correlation between U.S. yields and the Kiwi dollar, meaning that as U.S. yields continue to go down, the Kiwi that goes up, and conversely. There's almost nothing, I think, on the New Zealand data set that is affecting the currency pair as much as the U.S. yields because of the carry flows. Let's take a look at the calendar here and see what's going on the COM dollar land. We do have one important data set from New Zealand, which is the CPI data. We're actually thinking it's going to be bearish, that much weaker food and commodity prices are going to kind of press the Kiwi to the downside, which means that we could have a little bit of a sell-off into this data set, but that's probably going to be an opportunity to buy rather than an opportunity to sell as we go forward, because that's about the only data set on the New Zealand dollar as the week goes by. In Australia, there's a couple of data points. We have the minutes on Tuesday, which I don't think are on this calendar. And then we have, of course, the employment change. Now, you know, what's interesting is that the RBA has actually moved slightly left, meaning that it's really moved much more dovish on its stance, with some of the RBA members even suggesting the possibility of a rate cut rather than a rate hike as the next step in the move. And that's because Australian economy, even though it's done relatively well as far as employment goes, has actually done quite poorly as far as spending growth goes and growth goes. There is a really serious bubble popping in the Australian real estate market, and I think it's having a pretty significant impact on Australian spend, which is what's making the RBA much, much less hawkish than it was before. So this week's employment data is going to be very interesting, because if the employment data kind of rolls over the last, I think, 6 or 7 months, employment data has almost always beaten its expectation. Now, if this time we expect to actually maybe miss its expectation, that could just really add salt to the wound and turn the trade around. Aussie's gotten a very big bump also on the carry, but this could be very vulnerable to a sell-off if you get a double whammy of sort of dovish RBA minutes and a weak employment data set. And then into the end of the week, we have the Canadian data, which is also going to be relatively important for dollar CAD. Mostly, it'll be important in the sense of, if the inflation data is hot, then there is still a possibility, in a sense, that the Bank of Canada is going to shadow the Fed, meaning that they may kind of keep up with the Fed on a rate, one-for-one rate hike basis. If the data is actually weak, and we think it will be weak, it will really create a much bigger divergence. The Fed goes up in December and the BOC stays stationary. That should really put further pressure to the upside of dollar CAD, and that whole 25 equilibrium that I was talking about could bust up towards the 126 level. Let's take a look at the charts here, just see how everything is setting up on the COM dollar land. Actually, let me get rid of this. I'll remove this. And let's look at the commodities. Actually, let's start with the Aussie first, because to me that's one of the more interesting charts. So yeah, no doubt about it. Very, very bullish formation. End up on the highs of the week, as a matter of fact, almost at the 79 level, which is sort of the former support becomes current resistance level. Very, very common, very basic technical analysis stuff right over here. You can see this right over here, right? I stopped using straight lines, so everything now is going to be a little curvy. But more importantly, this whole 80 area is just such massive resist point. I think even if it makes into the 79 corridor, it really becomes a high probability sell from that 79 to 80. It's hard for me to imagine a scenario. Of course it exists, and of course it's possible, but it's hard for me to imagine a scenario let me get rid of this so you guys can actually see this a little bit better, where you could have the Aussie bust through this massive overhang resistance. And if that's not the case, if it's not going to bust through, then whatever rally we have into the zone is going to be an excellent opportunity to sell as we start to fade back, which I think we will. We're probably going to make a lower high here with a potential to go further. So to me, even though Aussie looks super bullish, it's entering into a super bearish territory, and I want to be trying to sell against this whole territory. Now, it could come out with incredibly strong labor data, a much more hawkish RBA. Sentiment could really change, but even then, it really has to overcome this whole 80, 81 corridor, which I think is a very, very tall. Let our New York firemen go by here. Is a very, very tall order. So to me, I really like this sell into the zone. We think the data is going to fail, and I think the price is going to fail as well. So to me, Aussie is one of the more interesting sells as we start the week. Now, Kiwi, might as well just look at the antipodeans altogether. Kiwi also comes up against pretty serious resist point at this 72.5. This is former support that now comes in as as resistance. As I said, Kiwi is really going to be driven by U.S. yields. I can't imagine U.S. yields compressing much further. Don't famous last words always. But if the U.S. yields sort of don't decline much further, I think this whole carry trade rally, the short carry rally, runs out of steam right around here. Kiwi probably looks less vulnerable to a sell-off than the Aussie does, not only because it has a better yield, but simply just because Aussie has more catalysts to the downside. So I kind of we'll talk about this in the crosses. I sort of like this on a relative strength basis against the Aussie as we go into the week. Now, last but not least, Canadian dollar. The interesting thing about the Canadian dollar is just actually how flat it's been for around this 125 area. We've just sort of been really oscillating sub 25, above 25, sub 25, really for the last 2 weeks. And that's because there's very little fresh information that we have from the BOC. They've sort of taken the foot off the pedal as far as tightening rates go. Oil has traded up, but not significantly up. It's sort of also equilibrium around the 50. It's reflecting, I think, both of these things. And the dollar certainly hasn't had the best of couple of weeks. U.S. yields really need to expand for this trade to start moving up. But we do have end of the week Canadian data, which could actually depress Canadian yields. In other words, if the market really becomes convinced that the BOC does nothing until the end of the year, but the Fed does raise 25 basis points, that should provide enough momentum here for this trade to trade back up. Overall, though, it's such a dead trade that I really wouldn't want to get involved until and unless it broke out cleanly. In which case, what I mean by that is it's got to close above 26 on a closing basis to really, for me to get interested on the long side, or drop below the 24s on a closing basis, which would indicate a much weaker dollar environment and possibly move all the way down to 120. For now, this kind of a hem and haw seesaw basis really leaves me uninterested and unimpressed in the caddy as we go. So that's how the week shapes up. It's really going to be Aussie as the dominant factor, and we're going to be watching that very carefully, both for the RBA minutes and for the Australian employment on Thursday. Wish you guys the best luck, the best trading. Boris, over now.